Most people assume that if they want to invest like Warren Buffett, they should just buy shares of Berkshire Hathaway. But here's the shocking truth: Buffett himself doesn't recommend that. In fact, he has made it clear that for most investors, the S&P 500 is the best investment strategy. But why would one of the greatest stock market investors of all time advise people to invest in a simple index fund instead of his own company? What does he know that most investors don't? The answer lies in long-term investment success and financial security. Buffett's investment philosophy has always been about simplicity, patience, and consistency, and the S&P 500 delivers all three. In this video, we're breaking down Buffett's shocking advice, the real reason he believes the S&P 500 beats Berkshire Hathaway, and how you can apply his wisdom to protect your money, grow your wealth, and never worry about finances again. If you're ready to unlock one of Buffett's greatest investment secrets, stay with me, because what you're about to learn could change the way you think about investing forever. If there's one person who understands the game of investing, it's Warren Buffett. Over the decades, he has built a financial empire based on solid principles, patience, discipline, and a sharp eye for long-lasting businesses. Buffett doesn't believe in getting rich quickly. He insists that the best investment is one that grows steadily over time. The stock market might seem like a minefield for many, but according to Buffett, if you understand the power of long-term investment, you will see it as an ally, not an enemy. One of the things that makes Buffett an icon is his ability to predict trends and avoid common pitfalls. He constantly warns against trying to time the stock market or chasing get-rich-quick schemes. Instead, he emphasizes sticking to proven strategies. A clear example of this is his strong belief in index funds, particularly the S&P 500, which consists of the 500 largest companies in the U.S. In his view, most people would be better off investing in this index rather than trying to pick individual stocks. Buffett's philosophy is simple yet powerful. Smart investing means thinking about the future with intelligence. Instead of obsessing over quick gains, he advises focusing on building a portfolio that can withstand the test of time. This means choosing investments that survive downturns and thrive during economic growth. That's why he frequently highlights the S&P 500 as a reliable choice, ideal for those who want financial security and solid returns without becoming financial experts. And if Buffett himself believes in it, maybe it's time to take a closer look, don't you think? Warren Buffett has spent his entire life mastering the art of investing, yet when it comes to ensuring his wife's financial future, he chose something surprisingly simple: the S&P 500. In his will, Buffett instructed that 90 of the inheritance should be invested in this index fund rather than in Berkshire Hathaway, the very company he built. Why? Because he understands that while he thrives on analyzing businesses, most people, his wife included, are better off with a long-term investment that requires no stock-picking expertise. Buffett has often said that the best investment for the average person isn't trying to beat the market, it's owning the market. The S&P 500 represents the biggest and most successful companies in the U.S., meaning it naturally adjusts over time. Weak businesses get replaced, strong ones rise, and investors benefit from overall economic growth. By choosing this simple investment strategy, Buffett ensured that his wife wouldn't have to worry about stock market fluctuations or picking winners and losers. This advice isn't just for his family, it's for everyone. Buffett believes most people spend too much time worrying about market movements and not enough time sticking to a proven path. His decision reflects the ultimate investment advice: keep it simple, stay diversified, and let the power of compounding work its magic. If it's good enough for Buffett's wife, it might be worth considering for your own portfolio, right? One of Warren Buffett's core beliefs is that money should serve you, not the other way around. True financial peace doesn't come from constantly checking stock prices or stressing over market crashes. It comes from knowing your investments are working for you, even when you're not thinking about them. That's why he champions the S&P 500 as a long-term investment. It's a way to participate in the growth of the economy without the daily anxiety of picking individual stocks or predicting short-term market moves. Buffett's approach is refreshingly simple. Instead of obsessing over financial news or chasing the next hot stock, invest in something that stands the test of time. The S&P 500 is designed to do just that. It holds a collection of the biggest and most stable companies in America, meaning it naturally adapts as the economy evolves. By putting money into an index fund and leaving it alone, investors can avoid the stress and uncertainty that come with active trading. Less stress, more wealth. It's a win-win situation. The beauty of this investment strategy is that it allows people to focus on what truly matters in life. Buffett himself has often said that money is a tool, not a source of happiness. When you stop worrying about market fluctuations and trust in a solid, long-term investment, you free up mental energy to enjoy life. And that, according to Buffett, is the real goal of financial success, not just having money, but having the freedom to stop worrying about it. Warren Buffett loves using real-life examples to illustrate financial wisdom, and one of his favorite stories is about his Aunt Katie. She wasn't a stock market expert, nor did she have insider knowledge about investment strategies. Yet, she built a comfortable life simply by saving diligently and letting her money grow over time. Buffett often recalls how she worried about financial security, even when she had more than enough. Her story perfectly highlights why having a stable, long-term investment is crucial. It removes the stress of constantly managing money. Buffett has said that if his Aunt Katie had just put her savings into the S&P 500, she could have achieved financial security without the worry. The index fund would have allowed her to benefit from the stock market's growth without needing to analyze companies or time the market. This is precisely why Buffett recommends it to people who aren't professional investors. By investing in the best companies through an index fund, you automatically participate in overall economic success without the risk of making poor stock choices. The lesson here is simple. Financial peace comes from a strategy that works even when you're not watching. Just like Aunt Katie, many people worry about money even when they don't need to. Buffett's advice? Set up a long-term investment. Let it grow, and spend your time enjoying life instead of stressing over market ups and downs. After all, isn't the whole point of wealth to create freedom, not anxiety? If there's one mistake that amateur investors make, it's putting all their money into a few stocks, hoping to strike it rich. Warren Buffett, however, knows that even the best investors get things wrong sometimes. That's why he advocates for diversification, and there's no easier way to achieve it than through the S&P 500. This index fund spreads your money across 500 of the best companies in the U.S., reducing the risk that a single bad investment will wipe you out. Instead of betting on one winner, you're investing in the collective strength of the economy. Buffett has always warned against the dangers of stock picking, especially for those who don't have time to study businesses full-time. Even he, with decades of expertise, admits that predicting the future of individual companies is difficult. The stock market is unpredictable, and even well-known companies can fail. The beauty of the S&P 500 is that weak companies naturally fall out, while stronger ones take their place. This built-in investment strategy ensures that your portfolio stays relevant without requiring constant adjustments. For non-professional investors, the S&P 500 isn't just an option, it's a safeguard, instead of losing sleep over which stock will skyrocket. Next, you get the benefit of long-term investment growth with minimal effort. Buffett's philosophy is clear: don't try to outsmart the market. Instead, own a piece of it, sit back, and let time do the heavy lifting. And in the long run, that's a strategy that has proven to beat most individual stock pickers. Many people assume that if Warren Buffett built his fortune through Berkshire Hathaway, then investing in his company must be the best strategy. But here's the shocking part. Buffett himself recommends the S&P 500 over Berkshire for most investors. Why? Because while Berkshire is a powerhouse, it requires faith in a single company's ability to continue outperforming. The S&P 500, on the other hand, is an automatic bet on the entire economy. It's not tied to one company's fate, but to the collective success of America's largest businesses. Berkshire Hathaway is essentially a collection of investments handpicked by Buffett and his team. While that's great for those who trust his expertise, it still means putting your money into a concentrated portfolio. The S&P 500, however, is built for diversification. It includes giants from various industries, reducing risk and ensuring steady long-term investment growth. If one sector struggles, others pick up the slack. That's a level of safety that even Berkshire can't guarantee. For most investors, simplicity beats complexity. The S&P 500 requires no research, no monitoring of individual stocks, and no dependence on a single company's leadership. Buffett himself acknowledges that after he's gone, even his family's wealth will be primarily invested in this index. If the greatest investor of all time believes the best investment for the average person is the S&P 500, maybe it's time to take that advice seriously. Warren Buffett often says that true wealth isn't just about having money, it's about never having to worry about it. The key to financial stability isn't chasing quick profits or trying to time the stock market, it's having an investment strategy that works consistently over time. That's why Buffett recommends the S&P 500 for most investors. It offers a simple, hands-off approach to long-term investment, allowing people to build wealth without constantly making decisions or stressing over market fluctuations. The biggest financial mistakes often come from emotions: fear during downturns and greed during booms. Buffett's advice is to avoid the noise and stick to a proven plan. The S&P 500 removes the need for constant decision-making because it's designed to grow alongside the economy. Instead of panicking during market dips or gambling on the next big stock, investors can stay focused on the long game. With enough time, history shows that the market rewards patience far more than speculation. The ultimate goal of investing is to create security so that money is never a source of anxiety. Buffett's approach to wealth building isn't about luxury or excess, it's about peace of mind. The S&P 500 isn't just an investment, it's a tool for financial freedom. When your money is working for you, you can focus on living life instead of worrying about finances. And in the end, isn't that what financial success is all about? So, what can we take away from Warren Buffett's advice? It's not about chasing the next big stock, and it's certainly not about trying to outsmart the market. It's about playing the long game, staying consistent, and letting the S&P 500 do the heavy lifting for you. Buffett has shown us that true financial peace comes from setting up a strategy that grows steadily and reliably, without the stress of constant decisions or the fear of missing out on the next big opportunity. But here's the real question: are you ready to stop worrying about money and start focusing on your long-term financial security? If you take Buffett's advice to heart, you can create a portfolio that works for you, whether you're an expert or a beginner. So, what's your next move? Start small, think long-term, and let the S&P 500 do its magic. Don't forget to subscribe to the IPU channel and turn on notifications so you never miss more actionable investment advice that can help you take control of your financial future.